Bitcoin got rejected. It couldn't be any more clear. In yesterday's video, we talked about how FOMC would likely be more bearish than bullish, and you can see here that we did get rejected right at the yearly open. In today's video, we'll be going over what we should be expecting next for Bitcoin. It might not surprise you, and of course, I'll be taking you through some of my trades. If you enjoyed the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. So let's start with the continuation of the trend that we've been monitoring on the channel over the past few days. You can see, where did we get rejected? Right at the anchored VWAP and right at that yearly open. We managed to wick above that level and we grab that upside liquidity only to get rejected once more. Bitcoin is now sitting right below the yearly open. And remember what I said in my previous video. I would only really be looking for new longs in the market on two conditions. Either we sweep up these lows or we get confirmation back above the yearly open. I read some of your comments. Why would you long if we get back above the yearly open and hold it as support? Seriously, what you're seeing right here is not a long trigger. You have to break above the level and hold it as support. I've been saying this time and time again. So if Bitcoin just continues to chop around in this range, I will likely not partake in any new Bitcoin trades. That being said, going into FOMC, we did see that Ethereum was actually outperforming Bitcoin, and it really piqued my curiosity. I wanted to look for an Ethereum trade, although you can see that Bitcoin is determining the rest of the market as it normally does. Ethereum also got rejected. We are now sitting just below $3,200, although ETH is still looking relatively strong. So if Bitcoin does give us another move to the upside, I would more be looking at Ethereum from a trading perspective. Now, you guys always see me show these great P&Ls on the channel, but I can admit here that I did indeed make a mistake. Take a look at this trade. This is still my Bitcoin long from the lows, which I've been showing time and time again. We managed to get in, knife catch if you will. However, this is my Zcash trade. You can see that I'm currently down around $20,000 on this trade. It seems like I selected the only cryptocurrency that is really holding up well during this volatility to the downside, and you can see that I'm getting absolutely wrecked on this trade. No worries, this is proper risk management. When you size into positions where you have more conviction, you make some significant profits, and then you can handle the losses when you use a little bit less capital. Now, the point isn't to compare your capital to mine, but rather just understanding proper risk management. Whenever I have a little bit less conviction in a trade, but I still deem it as a good opportunity, I use a smaller percentage of my trading portfolio. This Bitcoin long that you're seeing here, where I secured most of the profits, was my biggest trade of the year. This one was a far less significant trade. All of my trades are shared in my premium group if that interests you, but as you can tell, I do also have some potential losses. We need Bitcoin to break out of this range to give us some more confirmation in the market. If we start to lose this low around $87,000, that is when I think we will likely target this 84K low. And then of course, lose that 84K low. Ultimately, this bear flag just materializes itself and we end up coming to the lows and rolling over. This is not what you want to see. Again, to make it extremely clear, I would be looking for a potential new long in this market if we can reclaim the yearly open and that anchored VWAP, which is that orange line that you can see right here. I saw some comments in my previous video. Based on my analysis, a lot of you guys shorted going into FOMC, and hopefully you managed to secure some profits. Remember, nothing that I discuss on this channel should be construed as financial advice. I am just a guy on the internet sharing his own insights and his own personal trades. Reminder, if you want to join my free premium group, you do have the first link in my description down below. And of course, if you want to join, you do have to sign up with one of my affiliate exchange links and start trading on there. If you're already trading on an exchange like Bluffin, for example, because I read some of your comments, we can simply transfer you under my referral. All you need to do is DM me the keyword premium on Telegram, and I'd be happy to onboard you into my free premium group. And reminder, there is some pretty nice VIP perks if you're a relatively big trader. And going into the holiday season, they are offering a $1,000 bonus on the table. So make sure you take advantage of this because this promotion will not be lasting that long. Now, back to the Bitcoin chart. You can also see that we did manage to break out of this trend line, but we got rejected and now we are found right where the higher lows have been forming. If we start to lose this level, then this could easily send us lower and we grab some downside liquidity. On the 24-hour time frame, first of all, let's take a look at the CME gap. Did we fill that gap? The answer is Technically speaking, no, we did not fill the gap. So it would not surprise me if we go ahead and fill this gap, seeing as the price action is already to the downside here. This was a very, very small gap, but it was always within our expectation that we would go ahead and fill it, and now it looks like it's about to happen. Also, taking a look at the liquidity here, you can see that on the 24-hour time frame, there is liquidity on both sides, shorts and longs. And if I refresh this page, maybe it'll paint a little bit of a clearer picture. We can adjust the liquidity threshold here down to around 0.6, and it's pretty obvious that both shorts and longs are stuck right around this level. If we take a look at the 1 week time frame, this brings up the relief rally that I've been alluding to time and time again on the channel, bringing us all the way to, at the bare minimum, $98,000. To be clear, I still firmly believe that this will happen, even if Bitcoin does go ahead and break down from here. I think that the relief rally will happen. It's not a question of if, but rather a question of when. And as this bottom tries to continue to form itself and we can reclaim the yearly open, maybe next time around that we can hold above the yearly open as support, that's when we can start targeting that 98K to 100K level that I've been talking about time and time again. I would be looking to go into a long if we start to revisit lower levels. And of course, if you want to know exactly when I post my trades, you have the first link in my description down below. And let's talk about quantitative easing, because a lot of people have been addressing this since FOMC yesterday. So the Fed will begin buying $40 billion of short-term bills starting December 12th. Is QE back? No, as I've said time and time again, and let me just reiterate this through TraderMain's perspective. It isn't QE. Ending QT doesn't mean that QE starts. The Fed can just pause and sit neutral. Quantitative neutrality, that is. QE is when they buy long duration assets in size, usually trillions, to push down long-term rates. Right now, rates are still high and markets are literally near all-time highs. The last time that quantitative easing began, rates were at or near 0% and markets were already cooked. You need to remember that. So if you're hoping for quantitative easing, it's highly likely that the markets will be cooked by the time that that happens. And just to push this point even further, you need to remember that the last time that quantitative tightening ended in April of 2019, QE only started in March of 2020. Crypto ran hard in Q4 of 2020. And I agree with this. Patience pays. We will have to be very patient with this, and this will likely line up with the next bull cycle. So I hope I've made myself extremely clear. I actually think that Bitcoin has a higher likelihood to break down than up from here, seeing the reaction that we got after FOMC, which was the expected 25 basis point rate cut, although Fed Chair Jerome Powell was a little bit more hawkish. This was well within our expectations. Remember what I said, if we got the 25 basis point rate cut, we would likely see neutral to more bearishness. If we got no rate cuts, naturally that would have been extremely bearish, and if we got that 50 basis point rate cut, it would have been very surprising, probably extremely bullish. However, at this point in time, this isn't a surprise. Bitcoin is essentially just consolidating, and I will continue to trade the market that is right in front of me. And that sums up today's quick video. The Fed cut rates by 25 basis points, and Bitcoin essentially got rejected at a key supply zone right around the anchored VWAP and the yearly open. I feel like I'm repeating myself on this topic, but every single time that we've been tapping into this level, we've been getting rejected, suggesting that we could be moving lower from here. I want to see Bitcoin reclaim the yearly open to have more confidence that we will just explode higher out of here, targeting that 98K to 100K level. Until we can reclaim that level, it's highly likely that Bitcoin chops around and moves a little bit lower. If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.